Hey guys, welcome back to another video. I'm back here talking about GameStop and Robinhood. What happened, why they did not allow simple investors to buy more of GameStop, is this kind of sketchy, are they okay doing this? And I'm going to break all this down in this video today. Now first things first, please smash the like button because then the YouTube algorithms will then push out this video to more and more people, informing them on if we should support Robinhood in this situation, if we should switch our funds to a new brokerage such as Webull, TD Ameritrade, etc. It really helps out my small channel and I really appreciate it. So basically what happened is GameStop was being pumped up, as you can see on the chart on screen. It skyrocketed all the way up to about $400 and has recently crashed down to the crisp price of $55. So of course a lot of people in Robinhood were really helping up this pump. They were buying and buying and buying, and then when GameStop was eventually at the top, they cut all their investors off from being able to buy any more additional equity. Why'd they do this? Well, before I get into everything, I do want to show you what Vlad, the CEO of Robinhood, had to say for this, and I'll let you guys just take a look at it and then I'll break it down further.
The reason we did it was because Robinhood is a brokerage firm. We have lots of financial requirements, including SEC net capital requirements and clearinghouse deposits. So that's money that we have to deposit at various clearinghouses. So some of these requirements fluctuate quite a bit based on volatility in the markets, and they can be substantial. There's a lot of volatility and a lot of concentrated activity in these names that have been going viral on social media. So we're really in unprecedented times, and in order to protect the firm and protect our customers, we had to limit buying in these stocks.
Okay, let's be honest. He had no idea what he was talking about. Didn't make any sense. No one understands what he's trying to say. It sounds like he doesn't even know what Robinhood is, what they do, how they operate. And this is the CEO of this brokerage, and he has no idea what's happening. So I'm going to break it down a little bit easier for the majority of people to understand it. Basically, we have to understand how trading works. There is a buyer and there is a seller. And of course there's an exchange in between, whether that's the New York Stock Exchange, the NASDAQ. The shares and the cash is traded through them. Although there's more steps than that, it's not that simple. I want to show you this image, and this is what a clearinghouse is. It's a third party that will be able to make sure that the trade is facilitated. The buyer gets his shares and the seller gets the cash. The buyer clicks buy, and the shares are basically instantly put into his account, although the shares are not really there. Likewise with the seller, when they hit sell, the cash is instantly deposited, but they don't actually instantly get that cash. So what happens is you have to give them 2 extra business days. So the day of the sale or the buy is not included in this, so you have to wait for that day to close. And then for 2 more days, they have to do everything. What does the clearinghouse necessarily do? Well, of course they facilitate the trade, but they also make sure it's registered. They also eliminate what's called counterparty risk, where it's basically the buyer puts in an order, and let's say the seller doesn't come up with his other end, or vice versa. It's basically if you put in your order and the other person doesn't follow through with their side. That's really helpful for the buyer and the seller and the traders because they don't have to worry about the other party leaving them out to dry. And that would be obviously a major concern about trading in any situation if they were not there. So the clearinghouse is taking on a bit of a risk on this, and for that, they will go to all the brokerages such as Robinhood, Webull, TD Ameritrade, and ask for basically a deposit or a margin, and it is a percentage of the transaction. Let's say it's something like a $100 exchange. So let's say it's just 10%. Obviously, it would be $10. So Robinhood would have to pay up $10 to facilitate this trade, and that would be the collateral that they're putting up for the trade. Although the money that they do put up is, again, a percentage of the transaction. And what percentage is that? Well, The clearinghouse actually comes up with that, and long story short, it's mostly driven by the volatility of the underlying security. So obviously GameStop in this situation had immense volatility, so their deposit had to be a lot higher. After doing a little bit more research, it has come clear that it was about 100% collateral. So for every single dollar that was being exchanged, Robinhood actually had to put up that dollar to make sure that that transaction was facilitated. Basically, with the thousands and thousands of traders trading millions upon billions of dollars on this brokerage, Robinhood basically had to put up billions and billions of dollars every single day, and they wouldn't be able to get that money back for 2 extra days. And Robinhood does not have the cash on hand like some of these other larger brokerages. Therefore, they had to halt trading because they could not put up any more cash. They were bone dry with it. And I want to note that if there isn't a default by the buyer or the seller, there was nothing that was wrong, Robinhood gets all their money back. But if there was, then of course they would have to back that. Of course, they really reduced the amount that people could buy, but they still had selling open. Why is that? Well, they could not allow people to not exit their positions. And if they cut off selling and wouldn't let people out, then there was an immense problem, of course. So it's much more advantageous for them to cut off the buying and continue the selling. As sad as it might sound, because everyone wants to villainize Robinhood and, of course, go after Vlad in this situation, they did have a legitimate reason to cut off buying and continue selling. And, of course, I know it is sad because everyone likes to get behind the community, but in this situation, it does make sense. There is still conspiracies out there that they were working with Melvin Capital because they were business partners. And of course, Vlad is going in to testify in front of court on this within the next couple of weeks. And a lot of things will be unraveled soon enough. Now, of course, it looks very, very bad. And a lot of people are saying, yeah, this is awful, Robinhood is awful. But Robinhood wasn't the only brokerage that did this. I know Webull did it. And I understand that there is other brokerages that had this kind of problem. But I think that the reason why Robinhood is so far into this boiling pot of water is because, one, Vlad has no idea what he's talking about, or at least it seems like that. And then number two, the majority of the people that were pumping up the GameStop stock were Robinhood investors. So I understand why Robinhood is farther into this pot than other brokerages such as Webull or TD Ameritrade. Now, I'm not saying Robinhood was necessarily right in this situation, and I think that they should have been more prepared, although they cannot predict something like this. I mean, this is a once-in-a-lifetime opportunity and event that no one has really seen on Wall Street previously. Now, do I still support Robinhood? I do support Robinhood still. I don't necessarily think it's the best brokerage, and I still don't believe that it should be your number one brokerage. Me, personally, I like to use TD Ameritrade. I do have a Robinhood brokerage, although the majority of my money is in TD Ameritrade. Is Robinhood still great for amateur and beginner investors? Yes. I do support what they have done in the brokerage and fintech market, and they've pushed the zero commissions, which basically all brokerages do that now, and they're really revolutionizing what the fintech markets will do. For now, though, all we can do is just wait to see the outcome of how Vlad testifies in court, and I hope that everything works out. Okay, last thing, I know I already said it, but please, and if you really enjoyed this video and like to see these kind of videos, subscribe, hit that bell notification so you are notified when I post my new uploads, and of course, good luck in the markets, and see you next time.